Hello investors, welcome to the channel where I talk about investing for the long term through investing in companies that pay a dividend. This is known as dividend growth investing. My name is Michael, and today we're going to start off with looking at how the market ended for the week and look at stock futures. Just taking a quick look at the major indices for the week. For the S&P 500 index, it is down 11.49%. For the Nasdaq index, it is down 10.54%. And lastly, for the Dow Jones Index, it is down 12.36%. The markets are down severely this week, pretty much taking us back to its value in late June of 2019. These drops that we are experiencing range anywhere from between 12 to 15%, which causes the market to experience what we would refer to as a correction. So let's take a look at the main culprit behind why the stock market has been going down. The main culprit for driving down the stock market has been the news of the coronavirus spreading to various countries around the world and killing thousands of people. So US health officials are stating that this coronavirus is causing a global circumstance where a pandemic will occur. For the most part, COVID-19 is contained in the US, but the public has to prepare for an eventual outbreak. This is a raise for concern because at this point in time, it's not a matter of if COVID-19 will cause an outbreak and millions of people will be sick. Rather, it's a matter of when COVID-19 will cause an outbreak and millions of people will be sick. Looking at this piece of article right here, it is making a comparison between how the coronavirus matches up with other viruses in the same genre. Here, we can see that the coronavirus is estimated to be in this range right here, a little bit more than the common cold, the flu, but not as bad as MERS, Ebola, and SARS, at least not yet. Luckily, there is hope. If we look to the CDC for information, we can have a better idea of how to stop the COVID-19 virus from spreading further. So here's some information from the CDC that can help you with the coronavirus. Fact number 1 here tells us that this disease can make anyone sick regardless of their race or ethnicity. Fact number 2, the risk of having the COVID-19 virus in the US is extremely low. Fact number 3, anyone who has completed quarantine or has been released from isolation does not pose a risk of infection to other people. Fact number 4, you can help stop COVID-19 by knowing the signs and symptoms. Fever, cough, shortness of breath. If you have any of these symptoms and you have been in contact with someone who has been from China within the past 14 days or have been to China within the past 14 days and are starting to feel sick, please look for medical attention. Now, if you're totally healthy so far, this is something that you can do with fact number 5, and that is to mainly wash your hands often with soap and water for at least 20 seconds, especially after going to the bathroom, before eating, after blowing your nose, coughing, or sneezing. Avoid touching your eyes, nose, and mouth with unwashed hands. And fact number 5, there are some simple things that you can do to keep yourself and others healthy. For number 1, wash your hands often with soap and water for at least 20 seconds, especially after going to the bathroom, before eating, and after blowing your nose, coughing, or sneezing. Avoid touching your eyes, nose, and mouth with unwashed hands. If you are sick, then stay home. However, if you are around people and you have to cough or sneeze, do it with a tissue and then throw that away in the trash. if you need more information about the COVID-19 virus disease, then you can go to the CDC website and look up information. Moving on to some other news, Bob Iger steps down as CEO of Disney. Now, this news is quite important, at least for this portfolio, because I'm a long-term shareholder of Disney. According to this article, Bob Iger stepped down as Disney CEO effective immediately this past Tuesday. Now, if you're a dividend investor who also owns Disney stock like me, then this news to you comes at a bit of a shock, because under normal circumstances, new CEOs are made generally through transition periods where things are announced and there's a timeline for when one CEO leaves and is replaced by another CEO. Luckily, according to this article, Bob Iger is stepping down as CEO of Disney to focus on more creative aspects of Disney. If you don't know, Bob Iger has been the CEO of Disney for 15 plus years and has impacted the company immensely. For example, Bob Iger was there when Disney acquired Pixar, Lucasfilms, 21st Century Fox, and Marvel, to say the least. Now, Bob Iger is being replaced with Bob Chesapeake, a new CEO who described as a number-crunching tactician and delivers metrics. Overall, I think the outlook on Disney is positive, but we'll have to wait and see. Moving onward with the next topic, just this past week, M1 Finance announced that it has recently managed over $1 billion in assets on the platform. This is a great thing to see because it sort of validates my choice of having M1 as my main brokerage account to show on this channel. A few months ago, there were many brokerages like E-Trade, Charles Schwab, and Fidelity who finally went to discontinue transaction fees for trades and even provided fractional shares. Looking back, there was a lot of fear saying that because of all these other brokerages offering similar services as M1 Finance, that M1 Finance would go into bankruptcy. However, contrary to this thought, M1 Finance is actually thriving, so if you also choose to be part of this elite group of investors, then you can sign up using my affiliate link below. The affiliate link will help you and I get a better edge into investing, and hopefully we can take advantage of a downturning market. Looking at here, you can see that M1 Finance, based on this graph, is one of the first brokerage accounts to have reached $1 billion in assets in the fastest time. I think the only other brokerage that was able to do this even quicker than M1 Finance was Robinhood. Now, speaking of M1 Finance and market downturns, let's go take a look at my portfolio and see how it's been doing compared to the market. Oh boy, a lot of red here. So this is my M1 Finance account where I put in money to invest in the stock market, and due to the coronavirus for this past week, my portfolio overall is down 13.10% overall. This is about $470 worth of losses. Looking at the past quarter, my portfolio is down 14.29%, causing a loss of about $1,000. Looking at the past month, my portfolio is down 11.65%, causing a loss of about $1,070. Looking at this past week, my portfolio is down 11.58%, causing a loss of about $1,170. And for the day, there is no real information here, but I would gather to say that I have lost about $100 or so causing my portfolio to be down 1.17%. And just looking at the quarter view, the monthly view, and the weekly view, that's a lot of red to stomach. So now I'm showing this to everybody because I want everyone to see a holistic view of how investing works, so that you're not just seeing days, weeks, or months when I'm in the green, profiting from being in the stock markets. There are periods of time when I'm just losing money in terms of my portfolio's value. And that's alright, because that's just part of being an investor. In fact, I'm quite happy that the stock market is finally taking a downturn, because now I can buy stocks at cheaper prices. Even though all of the gains that I've made are pretty much gone. In fact, I think overall I'm down about $470 from my total investments, and in terms of market losses, I'm down $620. However, the dividends that I'm earning through this portfolio are still here. This earned dividends number is the reason for investing in this kind of portfolio. Even in market downturns, this number right here will continue to go up regardless of what happens. And the only reason for this number to ever stop moving upward is if all the companies that I invest in suddenly stop paying a dividend. So that's the whole reason behind my thought process of dividend investing. That it's okay to see downturns in the market because I have companies that are willing to pay out money for me holding shares in their company. Now, speaking of buying companies, this past week I invested about $1,000 into my Roth IRA to buy shares of a couple of companies because of the market downturn. So on the 24th, I bought shares in Royal Dutch Shell, 3M, ExxonMobil, EPR Properties, Pfizer, Hasbro's, BP, Royal Caribbean Cruises, BGS Foods, Chevron Corporation, Vermilion Energy, Chinshare Energy Partners. And on the 25th, I bought even more shares of some of the same companies, and even more so because the market went down even further. Again, I bought shares in 3M, UPS, Walgreens, Occidental, Chevron, Principal Financial Group, Royal Dutch Shell, Exxon, EPR Properties, Boeing, Royal Caribbean Cruises, Aflac, Disney, Cisco, Pfizer, and Vermilion Energies. I bought shares in all these companies because I thought that they were at good prices for me to dollar cost average my way into my targeted positions. Furthermore, on a fundamental level, all these companies are pretty solid for the future of their business. In addition, all of these companies pay a dividend for holding shares, and ideally, these dividends are set to increase over time. So as long as these companies pay out a dividend that increases over time so that compounding interest can take effect, then I will gladly continue to buy shares of that company at a discounted price, especially when there's nothing fundamentally wrong about these companies. It's just people overreacting to the coronavirus. Now let's go over and see which companies have paid me a dividend for this week. So looking at the start of this week, Royal Bank of Canada has paid me 67 cents. On the 28th, I earned 6 cents from CMS Energy Corporation, 11 cents from Citigroup, 28 cents from Inviva Partners LP, $4.37 from Gladstone Commercial Corporation, 35 cents from LTC Properties, $1.27 from NVE Corporation, $4.50 from Simon Property Group, and 4 cents from Welltower. These are dividends that I earned as a result of me owning shares of each company. This is money that I did not have to put any effort into earning besides clicking a few buttons to buy shares. Essentially, I'm earning money while I sleep. This is referred to passive income, earnings which are derived from an enterprise like a rental property or company, which require little to no effort to earn and maintain. Although these amounts may seem small, every little bit helps and will eventually snowball into something bigger through compounded interest. Lastly, let's take a look at how my portfolio is doing overall over on my spreadsheet. So I plugged in the numbers for the earned dividends that I have earned in the month of February, and it came out to $18.31, and I graphed that here. So doing a comparison, I am earning pretty much about the same amount as I would have earned in January, and this is ideal because the companies that I held onto last year were the same companies that I pretty much held onto this year. It's just that I bought more shares because I had more equity in my portfolio. So as you can see from comparing last year when I first started this portfolio and moving on to the February month of 2019, I only earned a difference of 5 cents. However, in the start of 2020, I earned $18.12 for January, and in February, I earned $18.31. So as we can see here, year over year, this portfolio is doing really well. It's making a lot of return in terms of the dividends earned throughout month-to-month basis. And even when we compare on a percentage level, there is a dramatic difference. Looking here, I wouldn't have been able to have earned this much dividends in the first run of this portfolio until about 9 months into the portfolio. But now, starting this year, I'm already earning about how much I would have earned last year, but in a quicker time span. So hopefully this kind of helps you see how compounding interest actually works in real time. In the future, I predict that my portfolio will just continue to grow and grow at an exponential rate, but only time will tell. So that pretty much concludes the update portion of my portfolio. Thank you so much for watching this video. And the next portion that I'm going to do is I'm going to do the raffle that I promised in the last video. So in the last video, I said that after I reach 1,000 subscribers that I would do a raffle for a $25 gift card to Amazon, and I'm going to do that live right now. So the raffle will be done in 2 ways. It will be used by this generator right here, and it will be from a numerator between 1 and 8. And that is because I've only posted 8 videos for everyone to comment on. So let's get this started. Alright, so we will use episode 1 to determine the winner of the $25 gift card to Amazon. And it looks like there are only 2 comments on that video. I don't count my own comment as being a comment, so we'll just do it out of 2. And let's see who the winner is. Okay, and there you have it. So the second comment of episode 1 is our winner. So congratulations on winning the $25 gift card to Amazon. All I ask that you do is message me on YouTube within a week of this posting, and in the message let me know what is your favorite stock and also include your contact information. So congratulations once again. Thank you for watching the video until the end. Don't worry if you weren't able to win this time. I plan on doing more giveaways as my channel grows. So one way for me to do more giveaways is to have more subscribers and more interaction on my YouTube videos. So if you're new to the channel, please subscribe and comment down in the videos in order for you to have a chance at winning more prizes on this channel. Lastly, the time available for you to collect your prize is about 1 week. So if I don't have a reply back within 1 week, then I will choose a new winner. Thank you so much for watching my video. Please like, comment, and subscribe. The more subscribers that I have, then the more chances that I can do giveaways such as this. And I hope to see you all again very soon.